For years, it seemed like the economy and your retirement, well, they were in good shape. But the times, they are a-changin'. With us now is Marcus Warren of Warren Wealth Management. And Marcus, I do think for a while there, man, you know, and it wasn't that long ago, we were just humming along and the economy was looking good. But we knew there had to be an end to it eventually. But this what they're calling it is volatility.
Yes.
So when I say volatility, I think about things getting volatile and combative. What does it mean to you as someone who manages wealth?
Well, you know, volatility is really, it's just the ebbs and the flows, the peaks and the valleys of the stock market. And, you know, we are experiencing volatility right now, and unfortunately, it is volatility towards the downside. We have officially entered what's called a bear market, which means we've dipped down 20%. The market has dipped down about 20% off of its peak. And so it has a lot of retirees nervous, a lot of retirees scared about, hey, is my money going to last through retirement? Am I going to have enough? And we're here to hopefully answer some of those questions.
There we go. So is volatility the new normal? Is this, you know, how long do you think this will last? Is it something we better get used to? I mean, what do you think here, Marcus?
You know, I think, you know, volatility at least, you know, in this, the foreseeable future, I think that volatility will be here, and it will be here for a while. It's always here anyway, but we've experienced volatility towards the upside for the last 10 years, and people really got comfortable thinking that that they knew what they were doing as far as investing, because the market was just going up and up and up for 10 years. So if you picked a mutual fund, if you picked a stock, it was, for the most part, pretty much going to go up, and people thought that they were responsible for that, that they all of a sudden became these Wall Street money managers who just knew how to pick stocks and mutual funds and things of that nature. And now we've hit this wall of volatility. And I say it's just really brought people back down to earth for the most part, understanding that, you know what, maybe you did have too much risk in your portfolio. Maybe you just aren't that good at picking stocks and mutual funds, or maybe your advisor or person that you work with, maybe they didn't have that that secret algorithm that they claimed that they had that could predict the market, because none of that works. The market is based on news, right? And news is unpredictable. Thus, the market is unpredictable. And once you can get a grasp of that, it makes it easier going into retirement.
So, Marcus, this volatility that we're talking about, you know, how does it affect behaviors? What do people tend to do, and what should they and should not they do?
Yeah. Well, what you shouldn't do is you should turn the TV off. How about this? What you should do is turn the TV off.
Don't tell them that.
And don't get caught up in the news, because the news is going to just report doom and gloom, right? And there's two emotions that drive the market. I talk about it all the time. It is greed and it's fear. And, you know, I have my certificate in financial planning. I'm a tax enrolled agent, studied finance, MBA, all of that stuff. And I don't manage money as much as I manage emotions. I manage clients and people's emotions, because when the euphoria has set in and the market is going up, people are excited and they want to buy more. They want to buy more. And, you know, I've been doing this for about 20 years now. And so what happens is, and it's just a cycle it's a cycle of madness is what I call it. And so when the market is going up, and we can go all the way back to the 1700s in Holland with tulips, right? The tulip craze, people are buying tulips, it crashes. Then we have gold. People love gold, the gold rush, people want gold, and it's a volatile investment. More recently, you got the dot-com craze. People buy on all these dot-com companies. They get euphoric, and bam, of course, it comes back to reality. Real estate, we had that real estate bubble not too long ago, same thing. And then, of course, crypto and NFTs and all that. And it's just this cycle of fear and greed. And here we are again today, where the market's been up for a good 10, 15 years or so. Now it's coming back, and now that fear sets in. And I'm having to manage those emotions of people just wanting to jump out, make rash decisions. And it's always, a lot of times what they do is they do the wrong thing, and they do it at the wrong time. And John, they do it all the time.
Okay. Here's a reason I think you should call Warren Wealth Management. Obviously, he's very knowledgeable and very qualified, but I also think you said something to me that you don't hear a lot right now because we're talking about, the economy's bad and volatility, but you said there's opportunity.
Yes.
Okay, so with this volatility comes opportunity, and someone like you, an expert like you know, hey, where to take advantage of the market. So talk a little bit about that, Marcus.
Yeah, and so when we talk about opportunity, of course, when the market takes a step back, the market is now selling at a discount, so to speak. And so for clients who are retired and they're pulling income from their retirement accounts, that money that they're pulling, that's that short-term money. That should be in safer investments. That should not be in the market, because the worst thing that can happen is the market takes a downturn and you have to pull money out in a declining market. That's not good. But we're talking about money that you won't need for another 5, 6, 10 years. Of course, people want to have a long retirement, so you really do have that time. Right now, the market is trading at a discount. It may be a good time to sit down with a good fiduciary advisor, scan those opportunities, and take advantage of it, because we know that these things don't last forever. Although when you're in the middle of it, it seems like it's going to last forever, but most times, and historically, it doesn't. So if you can position yourself, if you can get yourself in the right positions, then you're going to be okay in the long term.
So when you meet with a client, and we're going to let you know how you can have one of these meetings that we're now seeing on screen. When you meet with a client, is it a combination of their willingness to take risk and then your professional recommendations? I'm wondering, what are the ingredients that go into a successful retirement, Marcus?
So what we want to do when we sit down with clients is, one is we want to find out where you are, right? We got to get a basis on where you are and where you want to be. And then we'd make a determination if we're a good fit and we can get you from that point A to point B. And so that entails looking at your current investments, getting a risk profile, finding out your risk tolerance. More importantly, getting an idea of your current portfolio. How much risk do you have in that current portfolio? And then, of course, we talk about income planning, estate planning, taxes, because those are all important components of a successful retirement.
Okay, you mentioned see if it's a good fit. And folks, you watch Marcus, you know he's very, very well informed and educated, and of course, not only in wealth management, but taxes and things you should look out for moving into your retirement. But they can make that happen. 15-minute conversation. You can say, hey, is this a good fit for you, Marcus? Is it a good fit for them as a client? How does that work?
Yeah, so the 15-minute phone call is just an opportunity, and I say an efficient opportunity to for us, just like I said, to have an idea, have a foundation of where you are, and then if we're a good fit. If we are, then we'll take that next step to get you into the office, do that risk profile, look at your current investments, and see if we can help you and move you along the way.
I don't know this to be true, but I would think, when the economy was humming along, I think, as you said, we all see ourselves as geniuses. Oh, I knew exactly how to pick that stock. I knew where to put that money, and but really everyone was a winner for a while, regardless. Do you find that now, and I use the analogy of your automobile, when things are humming along and it's going really good, you go, I don't need a mechanic. I don't need a professional to look at my car. Now I need a professional, because all of a sudden, okay, the rules have changed. Not everyone is winning. Yeah. Is now a good time to give you a call?
Yeah, now's a fantastic time, because a lot of times it's just like you're saying, there was that secure footing that people felt that they had for a good 10 years or so, and now those little tremors are happening, and people want that peace of mind to know if they're okay. And it's the best time to sit down with a firm like mine, a good fiduciary advisor, who can give you an idea if you're on the right track, if changes need to be made, so forth and so on. Absolutely.
So don't let those tremors turn into an earthquake, right?
That's right. There you go. There you go.
Marcus Warren, as you can tell, man, very engaging and very knowledgeable. Give him a call today. Warren Wealth Management, Marcus. Then go to your website. There's a little bit of a questionnaire, and then get on your schedule, right?
Yeah. Here on the screen, there you go. We also have a one-night only event coming up.
Okay.
I think that's Tuesday, July 12th, 6 p.m., where we are going to talk about retiring in a bear market. There are a lot of people who planned on retiring this year, and now that the market has pulled back, they're a little nervous, a little anxious. This is an opportunity to sit down in a group setting. I'll give out some good, entertaining information, John, and it's just one night. Call that number, get registered. A lot of good stuff.
All righty. Marcus Warren, once again, Warren Wealth Management. Marcus, thank you for your time. Always appreciate it.
Appreciate it. Thank you.
Expertise at a very high level. Okay, coming up.